I've been deep diving the Federal Reserve for the past 2.5 years, and here are the top 10 reasons I don't like them. Number one, their name. They're not a Federal Reserve Bank because they're not federal, they don't hold reserves, and you can't make deposits there, so they're not a bank. Number two, not only do they not have reserves, nobody else has reserves. See, as of 2020, there was a rule, and that rule said all the banks in America have to hold a certain amount of reserves with our Federal Reserve. As of 2020, that reserve requirement is now 0%. If that sounds like a bad idea to you,
Number three,
I want to be in the Jekyll Island room. What's the Jekyll Island room? In 1910, following a state bank panic, 8 people got into a room together at a JP Morgan resort on an island in Georgia. We didn't even know Georgia had islands, and they met together to form the Federal Reserve. And it's not just where they were meeting or why they were meeting, it's who was meeting. And I'm going to get into number 8 because that's a huge one, but this one is huge because what if I told you that 0.25% of the entire nation's wealth was in that room? 8 people. That'd be crazy, right? But that's not the stat. It's actually 2.6. 2.6% of the entire nation. Oh, I got it wrong again. Move that decimal. 26% of the white. A lot of money in one room. I spit there a little.
Number four,
Then the branding of it. Nelson Aldrich, the senator at this meeting, took this billionaire plan from the 6-day meeting they had on a secret island that they had to take a train to a boat, and they had to lie to their families. So why they were there, they said they were on a duck hunting trip and didn't use their real names. Nelson Aldrich went back to Congress and said, hey, I came up with this really cool idea all by myself. It's called the Aldrich Plan. Presented it to Senate. Senate said this leans too far in favor of Wall Street. They rebranded it the Federal Reform. They still didn't like it. Then a boat sank. And then after that, they rebranded it the Federal Reserve Act and it passed. Number 6, the Pujo Committee. I'm not talking about Albert Pujols. I'm talking about the Pujo Committee, P-U-J-O. It was in 1912, the same year as that boat. And that whole committee was set up to say, hey, is this Federal Reserve thing just like a money trust? Are they just trying to take over the country's wealth? And guess what they found? Of almost all the major corporations that operate in America, almost all of them funneled to the same 3 to 4 bankers. Those same 3 to 4 bankers at the Jekyll Island meeting. From everything I can find in research is the Pujo Committee said, yes, there is a money trust here, but nothing really happened. Number 7, let's talk about when it was founded. December 23rd, 1913. Why was it passed so close to Christmas? Also, why did it pass at a 43 to 26 vote, a 17 vote difference, yet 27 lawmakers weren't present? 27 lawmakers were on Christmas recess when this passed. If all the lawmakers aren't present for a bill's passing, should the bill even be able to be passed? But it was. And the only difference from the original document, the Nelson Aldrich Plan, and the Federal Reserve Act was instead of there just being one major central bank, there's now a major central bank that the president gets to appoint the chair of, and there's 13 sub-banks that are also set up as private entities.
number 8,
In 1914, do you know what happened? See, let me just break something down for you. Since the dawn of time, since France, since Rome, pick a war, they've been funded by debt. And that debt is typically funded by war bonds. And those war bonds are created by a country, by a government. Or, if you're so lucky, by a central bank. A central bank's existence is to fund and finance war. And what happened 7 months after the founding of the Federal Reserve? World War I. And the Great Depression Confession from Mr. Milton Friedman. He wrote a book. In this book, he said the Federal Reserve either purposefully or haphazardly allowed for the Great Depression. When I originally read this book, I was like, how has nobody talked about this? Why is this not online more? And I was able to find a transcription from a speech given by the current Federal Reserve Board of Governors, soon-to-be chairman Ben Bernanke in 2001 at a Chicago birthday party for Milton Friedman, economist who worked with Reagan. He is a humongous name in the economist world. You can like him, hate him, he's smart. And what he said was very interesting. By not funding one of the main New York banks that ended up creating the large domino that toppled all the other banks, because there were hundreds of bank failures in the Great Depression, like people were using seashells as money. That's wild. In that time, if they had funded the Federal Reserve Bank that New York bank, it wouldn't have fallen, it wouldn't have created that domino effect. And if they hadn't run rates so hot and so low through the 20s, creating the roaring 20s, leading up to 1927, 1928, when they went and raised the rate, they caused this retraction effect, this rubber band-like effect that created scarcity. People ran to the banks didn't have money, bank run began. And Milton Friedman wrote about that in his book and said the Federal Reserve did this, and they might have done it on purpose. And then Ben Bernanke in this transcription, I read it all the way through. It was pretty boring. But then at the very end of his 40-minute speech, I think it was 39 minutes, 32 seconds, the very end of his speech, he says, and to you, Milton, about your claims towards the Federal Reserve, you're right. But because of people like you, it won't happen again. He was referencing the Great Depression in Milton Friedman's book. Then there's Woodrow Wilson, who actually made the quote over a speech and in an autobiography in the 1920s. He was sources saying that he is a most unhappy man because he has unwillingly handed over this great country into the hands of a few wealthy men. The Federal Reserve has had two jobs since the beginning of its existence: keep the economy stable for laymen like you and I, and keep the wealth transferring to the elite subtly. I'm editing this and I realized there was a whole clip that was missing about Ben Strong and the Warburg. So Ben Strong was at the meeting. He was with one of the huge banks for JP, and he ended up being leadership for the Federal Reserve. Because there's people out there that say, oh, the Jekyll Island wasn't actually what led to the Federal Reserve. That's a big flowing kablooey conspiracy. It's not. Ben Strong was there. He was a part of the planning committee, and then Woodrow Wilson appointed him to be the very first Federal Reserve chair in 1914. And then Paul Warburg ended up being the vice chair in 1916. And guess what Paul Warburg's brother did? Max. Oh, he was just over there, getting his way up in the international banking world of Germany, and ended up being one of the chairs of the German Reichsbank. The Nazi bank? And it's kind of weird that after World War I, we became the world's #1 creditor, and there was a global trade breakdown that happened after that bank failure that the Federal Reserve could have prevented that started the Great Depression, that led to Germany's economy failing, and that led to the uprising of the Third Reich and World War II. But those can't all be connected.